This is Alan Bush with ADMIS. In the stock index futures, we did see some gains in the overnight trade. This on the growing belief that some of the world's largest central banks will be adding more accommodation to the banking system. For example, the ECB appears more likely to add reserves at their June meeting. Also looks like the People's Bank of China will be more accommodative. And it also appears that the Bank of Japan will be adding more stimulus at their July meeting. So that general feeling of more accommodation from some of the world central banks helping stock index futures. However, some of the gains were limited by the retail sales report here in the U.S. that came in a bit on the weak side. Retail sales expected to be up 0.4%, coming in up 0.1%. However, the overriding influence and the dominating influence is the very low interest rate structure, not only here in the U.S. but elsewhere in the world, and we believe that will continue to propel stock index futures higher. In fact, we do have new historical highs today in the S&P and the Dow. Over to currencies, the euro currency a little bit lower. This after the Bundesbank, for the most part, gave their blessing to the ECB to lower interest rates. Also, we have the dollar index a little bit higher, probably not so much for anything happening here in the U.S. Of course, we did have retail sales on the weak side, but dollar strength, I think, more of a function of weakness in the euro currency, with more accommodation coming from the eurozone, which would support the dollar from an interest rate differential point of view and hurt the euro. But longer term, the dollar index will probably work lower as the dollar continues to underperform the news. So look for lower in the dollar, looking for lower in the yen as Japan's economy is likely to weaken. We would expect higher prices in the pound as the UK economy continues to perform very well. Credit markets, good gains today. I think a good part of the strength there due to the growing feeling about more accommodation coming from various central banks. Also, with retail sales as weak as they were here in the U.S., that also supportive. So still looking for higher in treasuries, especially for the 30-year bond. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.